Jesse Allen here, and joining us today, we have Curt Covington with us. He is with AgAmerica, and Curt is the Senior Director of Institutional Credit and Commodities Expert there. Curt, great to have you on the show today. How you doing?
I'm doing good. Thank you for inviting me, Jess.
Hey, Curt, I appreciate you making time to join us as we got a lot of things to talk about. And I would like to just start. We look overall at this commodity market, the farm economy. We've seen a lot of profitability for producers, depending on their situation, what they've done with marketing here the last couple of months with the higher prices in grains, et cetera, et cetera. I just want your take overall where we stand here, basically at the halfway point of the year, and your thoughts in general about where the farm economy is at compared to all these prices, these volatile swings higher, lower, et cetera, et cetera. Just where do you think we stand right now with this farm economy?
Well, I think it's a very tenuous time, Jesse, and I would just say I'm thankful for our farmers that corn prices are where they are, and there's a lot of commodity experts out there that say if the current weather conditions hold up, that it's not surprising that you'll see corn and bean prices go up even more, maybe to levels we've never ever seen before. But that's a function of lower yields potentially and a heavy reliance on crop insurance. So I guess I would say that I'm still cautiously optimistic that things are going to turn out pretty well for our farmers in the Midwest. There's obviously a significant amount of concern about having enough moisture to get through the summer. So for me, I've been around this for about 44 years. When I'm most worried about things, it tends to turn out at the end of the season, things end up okay. So for now, I'm just still cautiously optimistic that things are going to work out.
Well, and I think coming out of a pandemic too, 2020 was a weird year for everyone around the world. But, coming out of that, farmers and ranchers looking at their bottom line and seeing these higher prices to begin 2021. I've talked to quite a few guys and gals who've seen a lot of profitability already to start the year, depending on where they're at, what their marketing plan is, what they've sold, have they sold too much or too little, et cetera, et cetera. There's quite a few guys and gals who seem to be in that sweet spot who found some good profitability, Curt.
Well, it's really interesting, right? Farmers have become, and probably one of the major changes you see in farming today is these Midwest farmers have become better and better at marketing their own crops. In the old days, they'd grow it, they'd harvest it, they'd deliver it, and then they'd take off on a winter vacation for a while. Today, it's not uncommon. You see most of these farmers have good relationships with their banks, where they've gotten permission from their banks that, hey, I'm going to market this crop, but I'm not going to market immediately after harvest. I'm going to carry it into, the early part of the following year. Well, the good news is that prices have gone nowhere but up since the harvest. And so I think where the profit's being taken right now is on last year's crop. But having said that, I think there's plenty of farmers too that said, I forward contracted earlier in the year at 5 or 5.50, and I left all these profits on the table, right? That if I just stayed open to the market, for me, that's kind of a take the good with the bad. The good news is you've locked in a profit. Right at $5 and above, you've definitely locked in a reasonable profit. And if you look at farming from a long-term perspective, it's not just about this season or just about last season. It's not what the farmer down the street said in the coffee shop and how he's open to the market and seeing $7 corn. Take a longer view of that and say, if I'm a disciplined farmer and I discipline in my marketing of my crop, in the long term, I'm going to be ahead. So, I just think that just from what we've seen a lot of profits being built into selling last year's crop and building some nice profits in this year's crop.
When we talk those profits and we segue a little bit to the lending side for farm lending, and I know that's remained strong. And I'd have to think that a lot of farm lenders, banks, are looking at this profitability with farmers, and that's got to be a good sign, as we're moving forward, for farmers to continue to possibly expand the operation or things of that nature. There's a lot of good that has come out of the profits that are there for a lot of these farmers throughout the Midwest, Curt?
Yeah. So if you're sitting on the other side of the desk and you're the banker, and one of the things they're looking for farmers to do is rebuild their working capital on their balance sheet. You know as well as I do, Jesse, the last 5-6 years has been pretty tough on that. Lenders have carried their farmers, and I would say carried them out of passion over the last 5 years. But those bankers today are saying, we're happy to see the profits. We'll be more than happy to see you help build some working capital back in your operation. But the challenge is it's kind of a push and pull, Jesse. And the push and pull is this. If you look at a lot of these farmers, a lot of them deferred equipment maintenance or maybe equipment purchases if they really needed to. And they probably deferred a little bit of their fertility management on the farm in order to just kind of maintain margins and reduce their costs. The challenge for them is, the needs versus the wants. And, I need to get that equipment repaired and or replaced, right? I need to improve the fertility on my farm, which I've kind of put off. And so the banker on the other side saying, I tend to agree with you, but I also want you to continue to build some working capital in your balance sheet. So it's, it's kind of the different sides of the same coin, but it is going to be, I think, that discussion that you see happening right here. And in the end, and I talk to a lot of bankers, I think a lot of them have had really good conversations with their farmers, and the farmers and that bankers tend to be on the same page.
Well, and as we work through the rest of this year as well, I would have to think that, you and the folks there at AgAmerica are going to be having those conversations, as you mentioned, and there's a lot of options out there for our farmers and ranchers to work not only, with lending, but obviously looking at their overall operational plan, their marketing plans, everything, looking at that working capital and being able to kind of continue to grow and build and move the operation forward as we work through the rest of the year, Curt.
It's really interesting you bring this up. What I've seen in the farm community over the last, probably say 10 to 15 years, but more specifically after the last 5 years and then the pandemic last year, is thinking more strategically about their farming operation, looking at it in terms of where do I want this business to be in 5 years. There was a lot of disruption last year, Jesse, and I don't care whether you're farming corn and beans or whether you were farming almonds and blueberries, right? There was a significant amount of disruption in the marketplace. And what I think farmers gain from this is that something like this could make, a black swan event could potentially, and clearly that was a black swan event. And it separated the farming community, those that were nimble and had the ability to weather through that, and those that didn't and really kind of struggled. And I would say that probably one of the best programs that came out of that was the Coronavirus Food Assistance Program, which the USDA sponsored. And I'll tell you, that program worked really well, and I'm thankful for that. In the end and around all of this, I think one of the things that I think you have to think about when we talk about strategy is strategy doesn't come without many milestones and goals and objectives in the short run. So if the objective of this farming operation is to improve their profitability down the road, there's milestones that have to take place to do that, right? And most farmers don't control their revenue. They can control their yield, but they can't control the price, right? I mean, somebody's, right, they're price takers, and the industry sets the price, and you either take that price or you hang on and see what the next price is they offer. But they do have control over their costs. And most really good farmers that I think have come out of this, and I would say over the last 6 years, when you factor in the pandemic year, is what are the things I can do this year to strategically get my business to, down the road. And maybe that's to get that business to my kids. What do I do to control my costs?
And that's a great point you bring up. Curt, I've really enjoyed our discussion today. Any other final thoughts you have for us, though, just in general about what we talked about today, or anything else we haven't touched on you want to mention?
Well, I think, it's been an interesting, it's been an interesting ride for the last 5 or 6 years. How many people, if you ask farmers today, and if you ask bankers today, and if you ask ag economists, and you ask Jesse Allen, who would have ever thought the land values would have stayed up through the Midwest during, would have been what I would say fairly weak commodity prices, right? And you say, well, number one, I'm thankful for that, right? I mean, that balance sheet ended up as a safety net with land equities, a safety net for many of these farmers. What I would stay focused on as a banker, and I would stay focused on as a farmer, is simply this. I think it's probably fair to say that land values are more driven by where interest rates are than where commodity prices are. I think we proved that. I think there's still a lot of pent up availability of capital in rural America that can step in and buy a piece of property at the right price. But if interest rates start to climb, and I'm concerned about this, right? You've heard about the issues around the CPI and potentially stagflation in the market. For me, interest rates is the wild card. If interest rates start to climb, it's going to put pressure on the farmer's operating loan. And it's also going to put pressure on land values as fewer people are bidding on those, at least at the prices that we see today. So I think that's the piece as a takeaway for your audience, Jesse, to consider going forward in 2021.
That's a great point you bring up. Obviously, recently we saw what even a little news from the Federal Reserve did to the commodity markets in one day. So definitely a great point, I think, to wrap up on and watch out for moving forward, as you mentioned. And Curt, I know you and the great team there at AgAmerica have a lot of options for farmers when it comes to lending and financing. And I'm sure probably the easiest way is just to check out the website agamerica.com, isn't it?
That's right, Jesse. And we appreciate the time.
Definitely. Curt, appreciate you joining us today. Thanks so much, and we'll talk again soon. Thanks a lot.
Great. Thanks, Jesse.